Yeah, all right, guys. Let's just say I'll be analyzing some chart the way I actually do it. Currently, the one you can see on the chart is actually the one we had yesterday. It's yesterday, or I think within the week, and of course, I'll be explaining why I took the trade, and it's obvious it's actually going our way. I think it's almost got to my TP somewhere around here. This is actually the TP I choose, so wait, I think I'm actually be taking because I've already moved my stop loss down here. If you've not watched that video, you can just check the previous video I released about that. But that said, today we actually have a new video where I'll be explaining actually I take the trees and what I look into. So I'll be clearing the chart of any image or anything that can blur it. So first, before I analyze, the first thing I do is go to the higher time frame to get the overall trend of the market. So I actually move down here, then mark out my current or recent structure. That's my own key. I focus on recent structure, not really what happened months ago or years ago. I don't really care about that. I focus on what really is happening currently, like what really can I see, what are the structures that I feel might actually have great importance or great effect on my charts. So the first thing I can see on the daily time frame is actually this zone right here. So I mark out this zone, which is the first one. Why am I marking that? Because it's actually a zone that is to be respected on a daily time frame. You can see it was respected at this level, respected here, and also respected here. Now, after marking that zone, I don't think you can see any other major zone. Remember, I said major, not minor. So forget about all these noises. I call them noise to me. Because just mark out the recent zone, and that's all. Now, to get the more recent zone, I try to go down to the lower time frame, like the H4. Now, when you go to the H4, you can see actually when I mark that zone, the mark was still somewhere around there. That was I think around last week. So when the market came below it, I wait for a retest. Then that was why I took that trade of which you saw earlier on. So now, if I really am looking for another trade, now what do I do again? I still look for the recent structure that needs to be broken. Remember, this is the H4. Now going to the H4. Now this is the previous low. This becomes the previous low. If I'm to analyze this chart again, this becomes my recent low. Then I delete this and mark another structure around here, which becomes my new high. So that's what I do again. Remember, I always focus on the recent. Now I wait for the market reaction now. From this level to this level. Remember, this is the H4. So I believe once the market touch shape, I can see a good momentum candle being formed there. Probably maybe an engulfing candle or the morning star, the doji. Then I start looking for the bite back to the upside. But if that does not happen, I wait for the market to move below, then see the reaction before I believe it's going to chart again. Now, another thing also put into consideration is the break of market structures on my entering time frame. Now, remember that I said this becomes my new low and this becomes my new high. So the market is to move from here back to this new high right here. On the lower, remember, it can be a pullback on the what's it called on the higher time frame, but on the major time frame on my entry time frame, it can actually be a bigger trend, meaning that it's a day trade, not really a swing trading. So then I go to the let's say 15 minutes which I usually use for my entry. Now, what I want to see on the 15-minute chart, I want to see break of structure, something like this. You move up, if you break below, then move up again. Then, if that can happen, actually that has gone above this, then what do I do again? I now wait for, oh, sorry, please. I wait for the market to now move. Let me just pick another one to move up above this. If I can have a test of this again, then I know this structure is already broken. Then I can now buy the markets. So that's how I actually take my own trade. I just focus on the recent structures and forget about the other noises behind. So that's how I actually took this trade, which is currently playing out well. Now let's take another example. Let's pick from gold. Now gold will also make an analysis of these earlier on. So I'll be deleting all these trend lines and the structures previously. Come on. Okay. Then let me just delete this too. Alright, so let's go back again. You go to the daily. Remember, most time I don't really see a good chart pattern on daily, so you can maybe go to the weekly just to make sure you get a good zone where you feel the market is actually currently respecting. So let's go on this. Now, based on the daily, this is the recent low. This is my recent low on the daily chart. Oh, so please let me dub this ahead. Then this is the recent high. Remember, this is daily. One candle on daily actually means a lot. So this is my recent high. Now I've got the recent. Now I go back to the H4. Now I can see the market is moving something like in a range. We said that last week. It's as if just bouncing up and down within this range. Now, remember this is not the H4. You can actually choose to take this market or you can choose to actually leave it. But for me, what I usually prefer is I wait for the market to move above this first. That means I wait for the market move above this, show me a sign of retest, then continuation. Once I can see that, then I can say, okay, I'll be bullish on gold. Otherwise, if the market still moves below the retest of this zone, then I see signs of continuation, then I know that the market still will have way to go down. But I've always told you that overall, I'm actually still big time bullish on gold. I still expect the gold market to move a little bit higher, more higher, not even a little bit, because it has been bullish for like I think 4 months now. You can see on the weekly charts, would actually be very bullish. You can go down, you can see that be very bullish. So actually, I would still prefer the what's it called, the overall trend, which is the bullish. But then you can't judge the market, you don't know what the market is doing. So that's why most I prefer following the recent structure. Follow the recent or the most recent structure, not really what the general. Because if you're looking at what general is doing, there will always be highs and lows. So follow the recent one or the high frame, then lower it down to lower time frame to wait for entry. And what you get the entry, you wait for pick of structure, give you a series of higher highs and higher lows. So once that can be done, once you can find out, I think that is going to be all, and then you're good to go. So don't forget to drop your comment section. If it's not clear enough, you can actually drop a comment in the comment section. I will do it to touch every section of it over and over again. And don't forget, if you haven't subscribed, you have to hit the subscribe button. We actually do this almost every day, where we share our analysis and try to draw patterns. Remember, this is not a financial advice. You should be very careful when it comes to trading. You know your money is at risk, so do your own personal diligence with your charts and your analysis. Don't take my word for it. Do your own analysis. I'm only telling you how I see the market and how what I believe. I'm not saying you should do the same thing. But if you want to do it, it's all well, it's all your finance and it's all your money. So that said, we're gonna see you in the next video, and don't forget, we'll be dropping the volatility analysis for the day very soon. So that'll be done moments from now. So the analysis is already ready, so it will be dropped any moments from now. That said, that'll be all for today. So we'll see you in the next video, which is the volatility markets.